Okay, thanks. Thank you, thank you. Welcome, guys, and looking forward to this. Happy Saturday. Happy election season. Happy Fed raising interest rate season, and crazy. So thanks to Rob for the nice send off. I'm good friends with Rob. We trade together, and Hubert and I, we all work pretty closely together. So good guys, and definitely take up Rob on that offer. He's as he lets you know the real deal. And listening to his speech there, boy, I just need to come clean. And hope the regulators are listening. Yes, I trade. Here's one of my account with live positions. Here's another account with live positions, and then there's a third one right there with live positions. So I do trade. So yeah, good stuff, and let's have some fun. I know we're on the clock, and then let me know. Am I out at 2 o'clock? Is that Renee there? Am I out at 3 o'clock or 2:45? What's my cutoff, just so I can plan accordingly?
2:30. Well, actually, it'll be about 2:35 since
2:30.
ended a little late last time. So about
Okay, cool.
2:35.
All right, thanks. Appreciate it. All right. Yeah, Eric says, I think I saw that on YouTube, my trading setup. Yeah, I do some fun YouTube stuff. Trading all the time, and that's all you do, it can become a little monotonous, so it's kind of fun to do some other stuff. All right, let's go. We'll talk about some Fib. Very different than what Hubert and Rob are talking about, but just my own kind of take on the way I approach the trading markets. I'm big into Fib, and I know Investor Inspiration does use Fib. So, are you guys kind of comfortable with Fib? Are you using it in your day-to-day trading? Do you think it's voodoo and evil? Let me know, and I'll kind of keep an eye on the answers, and I'll adjust the presentation accordingly. So I'll kind of skip the pleasantries because I know we're under time here, but yeah, that's the trading office. In fact, I got a new stand-up desk that's going to get here Monday, and I'm going to revamp the whole office. But I am whatever. I usually, on a little bit longer presentations, I'll talk about the benefit of stand-up desks, which I firmly believe I'm switching over to stand-up there. So if you guys haven't done it, do it. But again, we're under a time limit here, so I'm going to get to the point. Guys, don't trade with money you can't afford to lose. Bad idea. You're going to wind up, in trouble. You're going to wind up scared. You're going to become scared money. You're going to hold on to losers too long. You're going to cut your winners too short. You need to accept the risk every single time you go into a trade before you click the buy or sell button. You need to be comfortable with the money that's at risk. And the way I look at the markets is the only way you can be comfortable with the capital that you have at risk is when you know where your stop loss is going to be. Okay, only then can you calculate the appropriate position size, know the money that's at risk, accept the risk, and then your mind is free to continue and trade and see the trade through to completion. Okay, so the warning sign, listen, I'm a real trader. I've been trading my whole professional career. I traded for a hedge fund on Wall Street. I traded for a living in San Diego. I'm the first one to tell you, man, trading is a boxing match. You're going to get knocked down. You got to get back up, keep swinging. Never go for the knockout and try to win the decision after 12 rounds. So that's all you're ever going to hear from me. I love this business. I work hard at this business. I like playing with charts. I love trading, but it's not for the faint of heart. Okay, so this is not easy. It's a skill game that you're going to have to work at for years. Okay, that's the reality of trading. Okay, so let's kind of talk about evolution. When I first started trading, and maybe you had a similar experience or going through a similar experience, I was reading in college Alexander Elder's book, Trading for a Living, that red book, and I just kept reading about indicator after indicator after indicator, and pretty soon I had like nine indicators over my chart, and you could barely even see the price action. So I got to the point where I'm kind of watching all these different indicators flip back and forth. I'm like, this doesn't really do much for me. I always felt like, for me, and I know Rob's a big stochastics guy, I approach the market a little bit different. I'm a little bit more of a swing trader. So for me, watching indicators react to price action always felt very lagging to me. As I said, I like to be a pre-planned trader. The motto of my company and the way I approach markets every day is plan your trade, trade your plan. So I know, and I already have my analysis done for Monday morning, I know what areas I want to trade and at what prices and at what markets. And if we get there, perfect. So what I did when I first started trading when I was like 20, I think it was first trade when I was 19 or 20 in college, I started, a couple years later, I started to reduce the amount of indicators that were on my chart. Okay, I went through this indicator evolution because I reached the point of paralysis by analysis. So it's kind of like what I refer to as the minimum effective dose. When you look at my charts today, this is all you'll see. Okay, no indicators. Really just a couple lines where I want to anticipate buying and selling levels. So the minimum effective dose is this idea that you want to use just enough that's useful and helpful, but once you start adding things that detract from your attention, it actually becomes dangerous, right? Like I have 2.5-year-old twin boys now, and they're sick all the time. And it's miserable. The whole house comes to a standstill when the kids get sick. So it's like, why not just whack them with, like, give them half a bottle of the cough medicine or whatever my wife's giving them, and just knock it out. But obviously, that's going to hurt the little guys, right? So you got to use the recommended dose, because anything more is going to hurt them. And I feel trading's the same way. When you start using too many things and it gets a little too complicated, that's when you really start working backwards. All right. So if you still don't believe me that you can trade without indicators, let's just kind of take a look at this. I'm picking on indicators, and there's a time and place for them, but let me just present this to you. A typical entry that I'll teach you here today is we move down into this zone of fib support. And these are all these crazy Fibonacci ratios that I like to look at. And once they cluster in a tight area, that's when you can anticipate a reversal, and that will serve as the foundation for a trade. So you get a bar that moves down in the fib support zone, and then a simple entry that I teach is you buy the move above the bar that tests the fib zone. So fine, this entry on the Qs would have been $104, very standard, no problem on that entry. If you take the MACD, which is an indicator that I'm sure you're comfortable with, by the time that MACD flips up, you're talking 108 bucks. So you're giving up $4. That's like 3.75%, 3.8% of the underlying that you're giving up. You trade 100 shares, that's 400 bucks. 1,000 shares, $4,000. And in fact, by the time you're getting into that trade with a MACD entry, I'm probably beginning to book profits. So I believe that you have to get a better entry. You have to anticipate your entries. When you anticipate your entries, you're doing something that's very important, and it's the quickest way to become a better trader. You are decreasing the size of your average stop loss. When you get a better entry, your average stops will go down, and I guarantee you will become a better trader. When you give up all this profit potential, okay, it's actually increasing the risk you're going to have to take in the trade. And when things start going south, as they always do in trading, you go through a drawdown period. That's really going to hurt when you're dealing at less than optimal entries. So here's a little example. As they mentioned, I do a lot on CNBC, and I always bring the technicals. So let me just play about 30 seconds of this piece, and I'll come back to you.
Today, your team is Todd Gordon for Schlossberg, and Tom, we're going to give you some props, because 3 months ago you said that oil would fall to 26 bucks a barrel. Listen to this.
I think you guys are going to be shocked to hear this. Technicals say in a good solid pullback we should see an equal leg push in the current move lower. A 77% drop from the reactionary high up at about $114 puts us at $26 in the crude oil market.
All right, fast forward to last Thursday, oil fell as low as $26.05. Todd, why were you off by a nickel? I'm kidding. I'm just joking. So now that you are the oil guru, technically, where do you see oil headed from here?
So that article and that piece kind of went viral. I got a ton of emails, Facebook messages. It wound up being the #1 article on CNBC.com and Yahoo Finance. Like, I had friends from high school reach out. I haven't talked to in 20 years. And I'm like, dude, I saw you. I didn't even know you were a stockbroker now. I'm like, no, not really. So that was kind of a career call for me in crude. Basically when it was at 38, 40 bucks, I outlined the area of fib support. I said we should get out and touch 26, and that's exactly what happened. And it was just fib, guys. It's a fib calculation that you could do inside of 15 seconds. Okay, so you got all these big fundamental hedge funds and guys trying to figure out supply and demand and OPEC and trying to figure out the low. It was just a simple fib projection that called the low in crude. Okay, so very quickly about me. I am Todd Gordon. I run tradinganalysis.com. Obviously, I love to trade. It's all I've ever done. It was my first job out of college. I actually traded through college. I was a ski racer, Division I ski racer at St. Lawrence, and I traded in my dorm. Hardly ever went to class. I just really wasn't into it that much. I left Wall Street in 2010, and when I met my wife Trish, Jake and Brody are now in our lives, and they're fun, but oh my God, does it change everything? So I'll skip this, but you gotta show this. This is my best man at the wedding, basically listing all the bad stuff I've ever done in my life, and Trump was there. So Trump possibly our future president knows all the bad stuff I've done because Jeff unleashed on me, so that was kind of fun. I do fast money, and CNBC have been doing it for, I'm actually in January about to go into my third 3-year contract with NBC, so I'm actually going on 9 years with NBC. And then I run the trading business from home, which is what I love to do. I love to trade. I love to work with people, and hopefully I can build the business up big enough to hand it over to Jake and Brody when they get old enough. So that's me. All right, you're a real hot shot. I'm really not, Rick. I'm probably one of the most humble guys, I think. I mean, I don't know. I'm pretty humble. I just love life and love doing. My dad told me, guys, grew up. He's like, don't do a job that you don't like. Life's too short. He's like, you just got to work your ass off. It's something you love, and life's fun. And so far, he's been right. So let's kind of skip through this a little bit. Again, we're on MTI, keeps us on pretty tight schedule here. So Dow 1923 to 1929. He goes, what happens next, right? Crash. So what's interesting is the Dow crashed right down to 200. Why would we stop at 200? Well, is it a round number? Maybe. But it also wound up being the 61% retracement of the entire rally in the roaring 20s, right? Not only did we hold it once, but we held it twice, then broke through and moved away. The slide that I kind of skipped over just in the interest of time was, myth and facts. Technicals don't work when markets are highly emotional, and technicals are self-fulfilling prophecies. Well, I think the 1929 crash was about as volatile as it comes and emotional as it comes, and our Fib and technicals in general self-fulfilling prophecies, I don't think so. The 61% retracement held the Dow crash, and Fib won't be applied to the trading markets for another 50 years. So does it always work? No. Can you trade just using one Fibonacci tool like retracements? No. You've got to use the other 3 tools to combine zones where you can anticipate trades. But this is just a nice fun example to show you. So we got to talk about anticipating, right? Anticipation is the ultimate power. Losers react, leaders anticipate, and that's the whole core theme of what I'm hitting here. The way I like to look at it is market maker versus market taker. Okay, you want to trade like a market maker. A market maker determines the price at which he wants to trade. Okay, he sets the market. A market taker sits down at his trade desk in the morning and just starts buying and sell, buy, sell, and just take whatever price is given to him. When you just take whatever price is given to you, you're immediately put at a position of weakness. When you're a market maker and you dictate to the market the price at which you want to trade, you're now in a position of strength. So following the herd, just buying breakouts and selling breakdowns, that's so 1999 and 98 when you could buy Corning and AOL and make $50 a share. Those days are well past. Okay, got to anticipate the trades because markets are much more complex now with algos and HFTs and different investment banks and market makers and all these guys who are fighting for your account dollars. So it's about trading from a position of strength. And to go back to this point, here's a typical Fib entry that I'll teach you. Okay, if you take the MACD entry, you're going to be up here. All right, up around $750 once the MACD trades. So not if, but when the market comes back to test you, okay, can you imagine how you feel if you're long Amazon from 750 and it's down to 735, it's now $15? You're like, oh God, and it hasn't yet broken these lows. You're like, I don't know, I can't hold on anymore. You might, hit the eject button only to watch Amazon rip higher. If you had a good entry, a competitive entry, a market maker entry, you're going to watch the market go up. You'll be profitable. It's going to come back, retest you. You're like, okay, back to break even. I'm down a little bit. I'm still above support. I'm down $3, $4, $5. No big deal. And you're not likely to make an emotional exit, and you'll participate in the move up. So when you deal in a position of weakness, emotions come in, and that's when bad decisions come in, and that's when more losing trades come in. Okay, so if you're not a believer of Fib, I do hear a lot of objections that I think are very valid. Some of them are, where do I start and stop the Fib? Which one of these ratios of all these crazy 1,000 ratios in the charts will reverse the market? It's all pretty confusing, and I agree. I agree. So, I've spent my entire career, professional working career, doing Fib and Elliott, and I've worked very hard to break it down into an easy to understand kind of approach so I can help traders like you. So handed down to us from Leonardo himself back from the, 13th, 14th century is the scroll of how to trade with Fibonacci analysis. So I'm going to try to get through these 6 steps, and if you can hang with me, you guys will walk away with an actionable trade plan to start using Monday. Giselle says, absolutely great points. Thank you, Giselle. I like your photo shoots. All right, let's go. So let's talk about swing waves, okay? This is, you gotta stay with me, because even before we start talking about Fib, you've got to understand how markets trade, and you've got to know what market environment you're in, which will then allow you to apply the right tools. So the first tool I need to introduce is called swing waves, all right? And let me just skip forward here for a sec. A swing wave is a high bar with a lower high to the left and a lower high to the right. That's a swing wave high. A swing wave low is a low bar with a higher low to the left and a higher low to the right. It's just a trend change in the market. When that trend change is not exceeded in at least 5 bars before and 5 bars following, I consider that a minor swing wave high, and it gets a purple dot. When a higher low in the market is not exceeded in 13 bars before and 13 after, that is called a major swing. So it's through these purple and blue dots that will help us pick out the most significant turning points in the market, and we're going to use those to base our Fib around. Now, the setup that I can teach you here today is a trend trading, trend pullback setup. So we have to determine the trend of the market to know what direction we need to be trading in. So the one that I like to use, this is like the only indicator that I use. It's called DMI oscillator. So it's the directional movement oscillator. It's, Wells Wilder back in the 50s or whatever. It's been out forever. It's available in every charting package. A lot of people use like a 10 or 12 or 14 default setting. I put it all the way up to 55, and sometimes if the market's super volatile, I'll crank it up to 89, because I like to stay in the trend for a longer period of time. So the oscillator, basically all you're focused on is if the oscillator is below the 0 line, you're in a downtrend. And if it's above the 0 line, you have blue bars, you're in an uptrend. And you want to do everything you can to align yourself with the direction of that oscillator. So just super, super easy. Okay. So I'm going to skip ADX just in the interest of time. It just tells you the strength of the trend, but I don't really care. I just look at the relative direction of the trend. And right now, this is Chevron, red oscillator, we're in a downtrend. Okay. So now let's start picking out the trend swings and the corrective swings. So this is Google on a 60-minute chart. Oscillator is obviously blue, so we know we're in an uptrend. The way you want to do this is you want to go back and look for the most recent major blue dot low. Okay, that's going to be the starting point for the trend wave that you want to study. From there, you're just going to look for the highest price point following that blue dot low. So at this point, this guy's got a purple dot because he's got at least 5 bars right and 5 bars left that have not taken out that high. And it looks like in a couple more bars, that 13th bar will print and that'll turn blue. Okay, this right here, blue dot low to the high in the chart, is the trend swing and trend wave that you will use later on for Fib calculation. Okay, this is a very objective way to apply Fib. And too much teaching out there is very subjective, and there's people, they throw Fib all over the chart, and you're like, oh my God, it looks like your chart is having a heart attack. So if you look back prior blue dot to blue dot swings, those are the trend swings that we want to study. Obviously, we're in an oscillator downtrend here, DMI's down. So you got blue dot high to blue dot low, there's a trend swing. Blue dot high to blue dot low, there's a trend swing. So there's a trend swing down, there's a correction or an interruption to the trend, and then another trend swing down. You're going to use these trending waves for Fib calculations later on. Jimmy, I will show you how to get a hold of the dots. It's no big deal. I've got them built for all the major charting packages. Okay, so we just covered trend waves. Now let's cover corrective waves. All right, we are in currently an oscillator uptrend. Okay, blue bar, so we're uptrend. Any blue dot high to blue dot low, when the oscillator is positive, will be a corrective swing. So you got blue dot high to blue dot low there, blue dot high to blue dot low there, and here. So you have 3 corrective waves. You will use these corrective waves for Fib calculations later on. Okay, there's that same Google chart, blue dot low to blue dot high, blue dot low to blue dot high in an oscillator downtrend. So those are your corrective waves. Okay, so we're like 20 minutes in, and I'm finally showing you your first Fib. Okay, and if you've studied Fib before, this should start to come together, and you're like, oh, this makes total sense, and I know exactly where to start and stop my fib retracements. Okay, so what you want to do is find the trending environment, and this is up. You find the most recent blue dot low, and then you're just going to go up to the highest price you can find. If it's a blue dot, great. If it's a purple dot, great. If it's only 1 or 2 bars off the high, that's fine too. You just find the highest move. So what you're doing is you're studying the distance travel in this trend wave. Let's call it $10, and if it drops $5, that's going to bring you into the 50% price retracement. These are the different retracements you're going to use. Now, some people are going to ask me, how do you know which one of these retracements to use to set up trades? You can't know. You cannot trade with just Fibonacci retracements. They're the foundation, they're the most commonly used tool, I use them every day, but they're just the first tool in a process. Okay, so this is Amazon on a 60-minute chart. We've got an oscillator uptrend, no problem. We got to look for the blue dot low. There we go. You're going to go up to the highest price in the chart. It's a purple dot. We don't have 13 bars yet. It's going to be close. So you on Thinkorswim here, which is what I'll use for the example, you hit the retracement study. You click the blue dot low first, then the high, and there are your retracements coming off that high. Okay, 38%, 50, 618, and 786. All right, how am I doing for time? Usually I would break away and do some real live price examples with you, but just don't have time here today, so I'm going to keep cruising. I'd love to take a second from the presentation and just do some live stuff, but we've got too many good speakers that are lined up for you here today. So let's immediately go to fib tool number 2, okay? Corrections. And I love this fib tool, and I think this is more accurate and useful than fib retracements. Fib retracements, just to review, we just studied the known distance of the prior trend wave to figure out how far this ongoing corrective wave might go. Now what we're going to do is use the prior known distance of a corrective wave and compare that to this corrective wave. Okay, and you're going to do that in all prior blue dot high to blue dot lows in the current trend, which is up. So every blue dot high to low is a trend that we're going to look at. Right? So you're going to click the beginning of this, end of this, and then off the high. It's a 3-click process. Okay? So let me show you what that's going to look like. So this is the S&P futures, 15-minute downtrend. All right. So we need to find every blue dot low to high, take that distance, multiply it by our fib ratios, which, these all come on your charting packages, and then project it off the low of the current correction. Okay, so we've got a blue dot low to high here. We have a blue dot low to high there. This one is purple to blue. That's a secondary correction, but I want to focus just on the blue dot corrections because those are the major corrections that we want to look at. So you hit the drawing tool, down to extensions. You're going to click 3 times. Okay, you're going to click once, the beginning of this correction, a second time up here, and then a third time down below. Okay, so whatever this distance is, let's say it's 6, 7 handles in the S&P, let's call it 6-point rally is going to be your 100% projection. And this would be called like a measured move or a 2-step pattern, AB equals CD. There's a lot of different names out there. Okay, so I tell you what, let me break away and let me just bring up a live chart real quick. And I just want to make sure you guys are okay with those 2 tools. So where's toss? Okay, charts. Okay. All right, so you guys should be able to see toss here. Here's the SPY. Let's see what's going on with the S&P. Okay. So right now we're in a downtrend. Okay, we're in a downtrend. So the way we're going to do this, let me go down to let's go down to 195 minutes. Let's make it a little bit more actionable for you. Okay. So perfect. So we're in a downtrend, right? Okay, oscillator's down. You're going to find the most recent blue dot high right there. That's going to be the starting point for fib retracement. So you get on here, retracements, blue dot high, down to the low. And you'll notice this guy has a blue dot. So that's your trend swing. Okay, we always want to get multiple price swings, get the opinion of multiple price swings to figure out where resistance might come in. So do you see the blue dot low to blue dot high correction that we will use to figure out how far this guy should rally? It's right here, blue dot low to blue dot high. So go drawings, Fib extensions, and there's a mistake, okay? A lot of charting platforms call them extensions. That's not correct. They're in fact called Fibonacci projections. It causes confusion, but whatever. It's a 3-click process. So you're going to click the beginning of this correction, click once, click a second time, and then you're going to go right down to the low of the ongoing correction. And that's how you draw Fibonacci projections. Okay. This is a nice cluster of fib resistance. I am short right now. Okay. I have net short portfolio right now into resistance. Can you put on a trade here? No. I don't think you can add trades down here. You want to be dealing up into fib resistance, not way down here. What happens if the market comes all the way back, $3 against you, you're sweating bullets, you stop yourself out, and then it goes, right? You need to be dealing, you need to be shorting into resistance, buying into support, and that requires patience. Yes, MT4, yes, we have it for MT4. Okay, let me keep going. And again, are you guys cool with these extensions, or do you want me to do another example? Are you guys okay? I need everyone typing in. Let me know if you want me to do more or just keep pressing. All right. Okay, one more. And usually, you know, I do a little bit longer presentations, so I go nice and slow and stuff like that. So, okay. And you're not going to find a setup in every single chart. So here's 60-minute IWM. Okay, we are in a downtrend. The oscillator's down, so there's the blue dot high, down to blue dot low. Do you see the blue dot low to high? The counter trend correction, there's one here. There's one here. So we'll go extension. So we're going to go blue dot low to high right there. Off the low. Okay, and let's do one more. Blue dot low to high right there. And now you're looking for clustering. And it's going to get a little, you take a little getting used to with all these levels on your charts. But where do the levels congregate? There's 1, 2, 3 right there. If I can be patient in IWM and wait for 119.20 to 65, I'll put an alert and just say, yo, text me when IWM trades 119.50 and I'll take a look at the market, and if I like it, we'll deal. Okay? All right, let me keep pushing. And again, it kills me to just speed through this stuff because it's so much fun teaching it, but that's okay. So back to our example, right? S&P futures. You got a downtrend, you're going to click blue dot low to blue dot high, off the low. There's the first one. Don't forget we have this blue dot low to that blue dot high, off the low, and we're starting to build a zone of resistance. Don't forget we also are going to do a retracement, okay? So we're going to go from the blue dot high all the way down to the low. So you're going to use this swing. The blue squares are going to match up with the blue fib ratios. The red squares are going to match up with the red fib ratios, and the green squares, this is a retracement of the blue dot high down to the low, are going to match up right there with green. So you have a really nice zone of S&P resistance from 2152.5 to 2057.5. Now, you can trade this any way you want. Like Rob's a big-time scalper. You know, he might position trade a little bit, but you know, I'd like Rob to get in there, have a 5-point zone, and if he can put 3, 4, 5 trades on, you know, short it, maybe stop out for small. Short it, make a little bit, short it, and if you can just hang in and get the big push out of there, you know, that's how you work a fib zone. Or if you're like me, like I'm an options trader, and I like to just, you know, if it's a high volatility, I'll just sell a call credit spread above fib resistance. If it's low volatility, I just buy an at the money put debit spread. Maybe I'll even buy an out of the money put debit spread against that resistance. There's a bunch of different ways you can trade it. Okay, so the whole idea here, guys, is to anticipate areas of resistance. When you get to it, boom, you put the trade on. You've got to be patient, and that's what I'm talking about, trading like a market maker. And you do that around fib zones. So a fib zone is 3 or more levels within a tight proximity that offers support or resistance around which you'll base your trades. The fib zones are formed not just from retracements, but from projections, extensions, symmetry, expansions, and retracements. Okay, and not only do we do this with price on the y-axis, we also do this with time on the x-axis, which is awesome for options traders. Okay, this is a live example.
And we have a
oh my God, that's loud.
Zone in wave 5.
Somebody's making a comment on YouTube. I have some fun. I did this live on YouTube, and we had good fib support right there, and we had good fib resistance up here. So I just put an options trade on. It was actually an iron condor, so I sold. Put spreads below fib support and sold call spreads above fib resistance and just executed the trade live. So those of you who are options traders might recognize this, but if you're not, it's no problem. You can just trade the stock, the underlying, or whatever. So I did a 29.5, 28 put credit spread, 31.5, 32.5 call credit spread. I took in 78 cents. That's the trade being executed live. Filled, sent the trade alert out to our customers, just kind of sped through, and this trade worked out well. So I did this one live on YouTube. It took about a week for it to work, and it worked out well. So then actually wound up exiting the trade live Friday afternoon. We made $1,000 in the trade. I was doing it at the distillery, so I'm on Friday. Like, I'm a part owner in a craft liquor distillery in upstate New York, in Saratoga, where I'm from. So I'll tell you about that in a little bit. But trading at the distillery before we go to work on the new rye and bourbon that's coming out next week. So I'll tell you more about that. That's kind of fun. All right. So now, most of the trades that you do should be in the direction of the trend. Okay, 80 to 90% of the trades that I do are in the direction of the trend. However, there are times that you can and should counter trend trade, but only when you've developed the discipline and the methodology that allows you to identify the potential reversal point ahead of time, as well as a clearly defined stop loss. 1 out of 10, 2 out of 10 trades are against the direction of my DMI oscillator. GMCR is a really good example. Okay, this stock went from 158 down to 38. The stock had been getting killed. We moved down into fib support, okay, right here. And I was looking at this as a counter trend trade. I had a very clearly defined zone of support. I put on a pretty aggressive option strategy, and those of you who know options would recognize this. This is called a bear call ladder. So basically what I did was I sold a 52.5, 55 call credit spread, and then I took those credits and bought an out of the money 57.5 call. This trade is like, it's got to go a lot higher, or it's got to be totally wrong and go much lower, and you'll make money. If it goes sideways, that's when you really lose money. Okay, it's kind of an interesting option trade, but it's a pretty aggressive trend reversal trade. So I put the trade on, sent it out to customers. I did a whole video about it, explained the trade. This is the actual execution of the trade. And we put it on, and the stock gapped up. The stock got bought out. It was a little lucky. It was a lot lucky. It was a huge. I had a good trading year last year, made money last year, but this happened in like December. I had a great trading year last year on this trade. So we had options, uncovered options at 85 cents and went to $32. So it's like if you bought an option for $85, it was now worth $3,200. And like I sent the trade alert out. I had customers who, you know, they doubled their small accounts overnight. Like, it was pretty awesome. It was fun. It was a really nice trade. Can't happen all the time, but the point is you can counter trend trade. The stock started to move higher from that fib support zone, but then it wound up gapping up. And what was interesting is actually it was an earnings day. It gapped up on bad earnings from the fib support zone. I was like, okay, something's going on here. So that's when I put the bear call ladder on, and we did it. So I took the profits from that Green Mountain coffee trade, and that's when I invested in Upstate Distilling, which is my my craft distillery business in Saratoga. So we have the vodka out, and then we're actually having the ribbon cutting ceremony Thursday in Saratoga. So I'm going to be bartending, and we have the rye and the bourbon coming out. There's actually a huge boom in American whiskey. I don't know if you guys know that, but it's been pretty fun to work on. Just kind of diversify away from the stock markets. So what I'm talking about here, guys, is, you know, I like to anticipate trades rather than just kind of chasing the indicators around. I think they just get you in a little too late in the market, and you just can't give up that profit edge, because you guys know when you give up that profit, you know, that margin of profit, that equates to increased risk, and that's really tough to give up in today's market. Oh, you're from close to there, Giselle. Where are you from? So what we like to do is we like to anticipate zones. This is another trade that was in McDonald's. Got lucky on this one. Stock gap down very quickly. In short, right into resistance, a very clearly defined stop right above the zone. You know, if the trades work, they should be relatively easy. You know, the work, 80% of the work goes into a trade before you put $1 into the market. And if I get stopped out and it goes through the zone of resistance, fine, screw it. You know, I did all my work. I don't get mad when I get stopped out of trades. I get really, really mad at myself when I put a stupid, unresearched trade on and I lose money. I hate that. But if I went through my process and I covered my bases and the trade didn't work out, fine. That's fine. No big deal. It's a very liberating way to trade. So it's all about having a game plan, right? So chasing price, has to have haphazard stops, no stops, trade by the seat of your pants. We like to use leading indicators that equate to a game plan. It's an enjoyable, comfortable, repeatable process. You guys have seen this before. Anticipation equals performance, and that's all about what we're talking. There's actually, oh, cool, Giselle, we had a talk. Hudson Valley's great. They got bought out. That's a goal. If we can get a buyout in our company, that'd be sweet. They did a nice job. All right, back. So if you guys want to continue on, if you're somewhat interested but somewhat confused in what I just taught you, that's perfect. That's exactly where you need to be. Okay. So if you want to start finding better entries, I have a course, as we all do. It's a very competitively priced course. There's a lot of quality content in there. I think it's over 15 or 20 hours of material teaching you Fib. So it is called The Best Way to Trade Fib, and I'm going to show you basically everything I know about Fib. How to do the Fib support and resistance zones, which is the culmination, of a lot of different tools coming together. So you can stop guessing risk and valuable capital and substandard setups. You will learn everything here. How to construct Fib support and resistance zones, my 3 favorite advanced Fib pattern setups, my favorite time frame to trade. I'll give you my trading rules. I'll show you how to set up your Fib tools and the ratios. You get a checklist and cheat sheets of all the different Fib tools so you can just print it out and have it right next to your computer. I'll show you my entries, exits, stops, targets. I'll show you how I scan the market, how to filter out the best trades, stop getting head faked and selling those lows and buying those tops only to get stopped out, and then to watch the market go in the direction you thought it would go. So if you want, new opportunity. There's a lot of Fib is very powerful. I feel like it's very popular lately too. In the last couple of years, I feel like the attention on Fib is exploding. So it's a great way to trade. This is for people who want to anticipate trades, who can have the patience and trade like a market maker, as I mentioned. This is not sit down and just buy, sell, buy, sell, buy, sell. It offers like a framework. It's a way that I can kind of keep my hyper self. I can protect against my hyper tendencies. So for me, it was very, monumental when I kind of found that you can plan your trades ahead of time and just stop chasing the market around. It's almost like you ever try to push Jello around the plate with a spoon? That's kind of what it felt like for a couple years of my trading. So if you believe that you can improve as a trader by taking quality setups, this is for you. This is not the holy grail. I don't trade FYE, which is for your entertainment. I trade when there's quality setups, and I trade to make money. This is fun to me. Working with you guys, doing videos, that's fun. But when it comes to trading, it's got to be boring. It's got to be repeatable. It's got to be a process. This is not a get-rich-quick scheme. This is for people who want to work, and those are the only kind of people I want to work with. All right. So I'll skip that. This is the course. It is done. It's packaged. You will get, once you purchase, it will give you a username and password to my site, and you will be able to access the course, and I can show it to you in a second here. So if you'd like to get involved, here's what it is. Here's my website, tradinganalysis.com/fibs, F-I-B-S. Here's what you get. And we have a special offer for you guys, okay? I'm going to give you not only this year's course that I just did in September, but I'm also going to give you last year's. So you're going to get actually 2 courses in one. So you're going to get the 2015 version, the updated 2016 version, which I just gave. You're going to get the art of the money management. As I mentioned, I used to trade for a hedge fund, and I basically learned money management from some of the best traders out there on the street, guys who make lots more money than I do. I was the youngest guy on the team, actually, as a trader. So I'm going to take those concepts that I learned from the hedge fund days, and I'll show you how to apply them to my market. So that's the art of money management. That's account, risk, and trade management. Stop trail plan, checklist and cheat sheets, profit taking plan, and I'm going to do live trading sessions next month in November. You will be invited to those. You also get the swing wave indicator. Those are the purple and blue dots that appear on your charts. Altogether, you're talking over $1,100 of content. But for you guys, we're doing 25 spots at $97. Okay, 97 bucks. You are good to go. You get all of this for a very competitive price. Tradinganalysis.com/fibs. Here is some of the feedback from last year's course. Phenomenal material and explanations. Best investment of time ever. Learn more in a few hours. More than a few hours than waiting through several days of study. Much more to absorb. Great call on Facebook. Good stuff. Thank you, Todd. Great class. I love it. A lot of insights. I said I had my doubts earlier. I didn't know how to do Fib time extension projection. After attending your session today, you cleared my doubt. Best explanation of delta I've ever heard. Thank you. Light bulb moment. Not overly complicated. Awesome stuff. Like, that's all unsolicited feedback. So that's what we're talking about here. I don't think I'm going to have time to take you through this, but this is a complete 9-step trading plan, okay, that I just don't, I'm running up against time. I got 3 minutes left, but for every trade that we do using Fib, I'll give you a very clear trading plan of how you can approach it, okay? So that's the plan, tradinganalysis.com/fibs. Let me show you the course. I'll even show you the experience. So let me just bring my website over here. I should have had it ready for you. Okay. So when you purchase, you will get a username and password, and this is good forever. Okay, there's no expiration on this. I make a joke that it'll last 61.8 years. My other stupid joke was, usually I find that 61.8% of people believe Fib works and 38.2% of the people don't believe it works. And the other ridiculous joke I have is I set my alarm clock at 6:18 in the morning, which was true until you have kids. And then, God, if you could sleep till 6:18 in the morning, that'd be awesome. So you go to members area at tradinganalysis.com, and then the educational courses, it's going to be right here, the best way to trade Fib. You have a username and password. And here's what the course looks like, okay? This is the archive from 2015 and 14. Those are the trading sessions. There's the webinar slides, live trading, download section. There's the cheat sheet, the indicators, installation. There's a lot of stuff in here. So that's last year. And then this is, okay, actually, no, it's all combined in one. So this is the latest course right here, and this is from 2015 and 14. So very good competitive offering. Very proud of the course. I've had great feedback from it, so I'm very proud to put it in front of you and you know, learn, as Bob said, learn from a real trader who trades every day. Traded for a hedge fund. It's all I've ever done out of school is trade, and I know what you guys are going through. You know, you don't need to spend thousands of dollars for education when you get a solid course like this for $100. So that's my offer. How about some questions? Yes, guys, this works in anything. I like to trade options, but you know, this can be used for stocks, forex, futures, anything. 1 minute chart, 5 minute chart, 30, 60, 90, 120, 240, daily, weekly, monthly, anything you want. Okay. I did trade forex. I used to trade. I used to be the senior technical analyst at forex.com, and I would write the daily research report. It went out to like 40 countries around the world and was based in Fib. So you can do this in forex. I made the transition back when the forex industry started getting a little shaky, and I'm like, yeah, I don't like this anymore. Central banks started cutting rates, and I was like, I don't like the FX market. So I moved back to the stock market, which is where it all started to me. But you can trade this in use this in any markets. Credit spreads, yes, I trade credit spreads all the time. I have a few credit spreads on now. I love doing this. I love selling credit spreads. You know, if it's a call credit spread above Fib resistance, below support. I think I have one on an APA. Yeah, so I have a 61 put spread on right now. I'm down $220 on it. 6 days to go. We're trading at $60.72. So crude oil is starting to hold Fib support a little bit, so I think we're going to be okay in that trade. Down some money right now. Actually had a huge day on Friday. I booked a bunch of profits. So XLV, we were short. We had a call debit spread that worked out really well into Fib support, so we made $1,000 on that. So yeah, I've kind of got some losers right now, but it was a profitable trading week because we took a lot of stuff off Friday. Okay, so tradinganalysis.com/fibs, F-I-B-S. No, Pat, nope. Oil and commodities are starting to move, Jimmy, yeah. Giselle, if we sign up for the course, are you available to answer questions or go through videos? Yes. Yeah, I have a whole team. We have a team that customer support. If you need me, you know, you can just say, you know, have Todd ask this question or send it to Todd, and I'll get back to you, Giselle. I want to talk to you about your experience at Hudson as well. So sign up and just email me if you would, and I'll touch base with you. Jimmy, do you think we'll have a crash in 2000? I do. Are we going to crash? And I know I'm up against my time, but yes. And I do have fib resistance above us. I can show you where I think it's going to happen. So, so that's that, guys. I appreciate it. Great questions and participation. I really enjoyed it. Thanks to Investor Inspiration for putting this on. And I know you guys are getting jam-packed with great information here today. So keep it real. As Rob said, work with guys who are actually trading and who know what you're going through, because much different than hitting balls in the driving range when there's no penalties and actually sitting out there in a tight fairway with water left and trees right, and you got to crush it right down the middle. So, all right, guys. Thanks a ton, and thanks again for putting this on. Great feedback and questions, and enjoy the rest of the presentations, guys. Take care.